We will start with the first solution that every bank will give you, and that is a savings account. Of course, the returns from a savings account are usually not that great, but it's usually a good pool to collect the money, and then you decide where it's going to go later on. So the other options will include money market funds. They'll also include government bonds and securities. You can also look at using investment-linked insurance solutions that are going to give you protection, as well as a return, a moderate return in terms of where your money is going to be growing, and you're going to get a guaranteed amount at the end of the period. Others would be stocks. There are banks that will help you facilitate purchasing stocks in the Nairobi Securities Exchange. And for more sophisticated customers, you might find options that are even global. You might be able to buy global stocks or what is known as mutual funds, and all these solutions are available to in the bank that you work for, or rather you work with. And it takes a bit of knowledge and seeking financial advice from your banker, and make your banker a friend, because then they have this knowledge, and this knowledge is available for all of us to consume.
It's free of charge.
Yes.
Yeah. So talking about the different ways that you can invest, whether it's in a fixed deposit account or it's can I say the money markets, and all this. Somebody else might be saying, like, really, I have very little money. Probably I'm just earning, say, 20,000 shillings. Can I really invest in a fixed deposit account? Can I even invest in, in the stocks? But essentially what I'm saying is, does it mean that more money means you can save more? Do you need to have a lot of money for you to save?
Not really. Remember, we are talking of percentages, and regardless of how much you have, then you can work out a percentage of whatever amount that it is. So here, the discipline is the most important thing, and especially when you look at it from how people start investing. Most people believe that I will only start investing when I get a lot of money, but ideally, you should start investing as soon as you start accessing money. So once you distribute that, we call it the 50-30-20 rule. Of course, 50 goes to needs, 30 goes to your wants and entertainment and just having a good life. And again, we are not saying that you live a boring life because you are investing and all that. So 30% is actually essentially for you to enjoy life, and then 20% is now what goes into the investments. And so regardless of how much money you're earning, there is a place for each person, whether you're earning 10,000 shillings or 50 or 100 or even 1,000,000 shillings, then there's a place for you to be able to demarcate that this amount is going to go into investments. And the good thing is, all those options that I've mentioned, the entry barrier has actually been very low, lowered so much, because as little as even 100 shillings. Right now, money market funds usually ask for a minimum amount of 100 shillings to start investing. So it means that literally everyone can be able to invest. When you talk of shares, for example, the minimum usually is 100 shares, and so depending on how much the share is going for, the counter, the price for each share, then you can actually, if like we have shares that are going for like 2 shillings, 3 shillings. So it means that if you multiply that by 100, we are talking of amounts that are less than 500 shillings to start your journey investing in stock exchanges, for example.